Hello Market Club members everywhere. Adam Hewison here, and it's Friday. Well, the big news about the interest rates is over. It didn't happen, and look what happened to the market. We're actually starting off a little bit differently today. We're looking at a 30-minute chart of the Dow. And I wanted to show you this chart because if you're a very, very short-term trader, this is how it could help you. And I want to show you one indicator, particularly how it works and how it can work with you in very short-term trading. And I'm going to repeat, this is not for everybody. So here we are, we're looking at a 30-minute chart. It's a bar chart, so we make a bar every 30 minutes and move on and so forth. What I want to share with you is the RSI under here. So you can see once it turns over the 50 line, like right here, it starts to move up, okay? And it moves up and up and up and up until it turns under the 50 line, which is right around here, and indicating you're going to see a down move. And that's exactly what happened. This is today's big move right here. That's the opening. Now we had a couple of bars to the right of that, which is just what we expected. I expect we'll see more choppy action, and then eventually on the close, maybe the last hour of trading, another big push down. Remember, we were looking for a lower week this week in the Dow. We closed last week at 16,433. Okay, so if we close below that, then I think that's not a good sign for this market. Let's clear the screen. Let's take a look at a daily chart. Easiest to do with Market Club, just pull down to daily, click, and I'm going to go to 3 months. Now I've already drawn in the Fibonacci, which we had drawn in on I think Tuesday or Wednesday of this week, and you can see exactly what we were looking at in terms of what we thought was going to happen. Now here we are, we have the RSI, remember the RSI? So there's the resistance coming in at 50. Remember that was support, now it's resistance. We got right back to the Fibonacci line, which is 16,761. Hit there, just went a couple of points higher and then just collapsed. Now I think what's going to happen, you're going to see this market break this trend line right here somewhere along the line. It may have actually, in fact, let's just take that off and let's draw it really accurately with our trend line tool. So you click here and drag this up. Well, there it is. It's broken it to the downside. If it closes below that, you're going to see a lot more downside action next week. Let's move on. Pretty much the same pattern in the S&P 500. Again, hit the resistance on the RSI. Big down day today. This is not a good sign. This candle right here, and it's probably a Fibonacci retracement. Again, let's just put it in. We won't even guess. We'll just see if it is a Fibonacci retracement. There it is, right on the money, 61.8% at 2012. That was the Fibonacci retracement, and look where we're trading right now, some 50 points lower. So let's move on. This is the Nasdaq. It's a little bit stronger than the Nasdaq. However, it's not going to be able to just bear the brunt and go it alone. It's going to be under pressure from the S&P 500 and also Dow. Watch the 50 line here. If it goes below that line, it's going to put more downside pressure. We expect this to happen later in the day. The US dollar against the euro, and the euro has been doing very well, which we expected it to do, and all of our trade triangles here are positive on the euro. We expect that to continue. If we close around these levels, this will probably be close to the highest close we have seen in about 7 or 8 weeks in this market. So let's see how that plays out, but I would not want to be short this market at the moment. This is gold. Gold's putting in a good performance. However, it's not in a bull market, and I just want to express that to you. We look at 2 indicators for the bull trend in gold, and one is the weekly trade triangles, which is red, indicating a negative sideways movement, and the green, which means you should be out of the market. This is a choppy trading range, so we're getting to the top of this trading range, which is right around here, and I expect this is going to be an area, it's going to be a problem for gold. But you've had 3 strong up days here, so, and you've moved over the 50 line, so we may see a little more strength in that market in the short term. This is crude oil. Crude oil, if you remember, we thought this was a continuation pattern. We still do. You had the nice move up from the lows here, then you sort of moved it down, you broke out here, you've seen a couple of consolidation days. I suspect we're going to see this market continue up. We are above the 50 line. We have been for some time, but we're getting to support now. This is where support should come in. If you're not long this market, you may want to take a position, and you can put your stops right under the 44 level. That's what we would recommend. Hey, I'm Adam Hewison. It's been a heck of a week. You can see that the markets are really kind of getting more into the groove. I think next week will be a much better week for trading, and we'll come back with some ideas on stocks that you should be looking at, and also we'll be covering the indexes. Have a great weekend, everyone. Thanks for watching.